Coach, we can't hear you. You might be muted.
Thank you so much, Stel. Hello, my trading warrior, bro. Morning, buddy.
Hey.
Let's have a great week. Maybe it'd be better if I was muted with some of the ideas I have this morning, and maybe not. Anyway, we're FACE. You know why? It's an acronym of this great place. ForexAnalytix, community, that's you. Experience, that's us. We have plenty of it. And I'm sure there's many out there in our audience that have plenty too. We have quite a few pattern and plays working. Interesting, Steve, he doesn't put out a lot. You know, I'm hoping he's right here and we get one more wash. You know, a lot of people came in and bought the crude on the news with all the rhetoric flying back and forth between the global community and the Saudis and even us, and you know, a pretty terrible, tragic thing if that happened in the Saudi embassy in Turkey, in Istanbul, and the global community's in an outrage. But let's not forget, Saudi's a swing producer. They do have some leverage, and they even came out with a threat that you haven't heard from them. I don't know, maybe since the last oil embargo in the 70s, that they would only accept payment in other currencies. And it's pretty complicated. You know, they just bought $1 billion worth of war machines. They're our ally against in the adversarial relationship with Iran. So that's going to be pretty complicated. It makes me think that, let me just go quickly to the crude, that we probably won't need to flush out the headline buyers here. But I know Grega likes it for higher. Some other people I respect like it for higher, thinking that this is just a 3 waiver down here. You could kind of see it better on a 4. You know, kind of like just 1, 2, 3. But the only thing short term, and even on the 4 hour, we had a confirmed low here. On the 1 hour, we had really had a confirmed low. So I would love to see Steve's objective be accomplished at 70. And
I like it higher as well, Coach. I like.
Do you? Okay.
Yeah, I do. But
just a scalp here. Yeah, scalp.
But I do believe that, you know, I see this as a consolidation. I do think there is one more leg lower before higher.
Well, you know, my teachings agree with you because of this. See the low, Steve? That reading, yep. 21. You know, usually don't get major bottoms off a 21 reading. Normally you have to have a few divergences. There are none here. Maybe against this one, but this one was, you know, 17. So, you know, most turns happen when the market is making new lows. And my preferred number for it to stay above is the 30 level. So I think there's a chance if we had a slam here that we could have some divergence. So like that trade, this one might be a little bit more controversial because, you know, we're on the verge of breaking the trend line that Blake has. In the end, he brought it up late last week. But I think that there's potential for a bear market rally, a retrace in the indexes. Right now, the NASDAQ showing the most relative strength, followed by the S&P. And why can't the S&Ps rally back to 2840? There'd be some kind of, I didn't do the fibs on it back on the way up, but I did on the NAS. So 38%, 3,200. Halfway back to where it really accelerated is 7,300, so that's 150 away. I'm thinking if that happens, we get a bear market rally in yen also. We're not confirming here. We're at this major support, this 1170, 1180 level. Right here, you can see this pivot line, you know, took it out intraday. Intraday doesn't mean much. But if you get a reversal day, Joe did an interview with Real Vision and talked about that we could see a pop towards 113. I think that's viable if we get the market to start recovering in a big way. The Dixie is, you know, kind of trapped in between these two moving averages, still trying to hold the 50 here. And I believe there was something up here on the 200. I'm not showing it here on these charts, but there was a lot of resistance at 95.60. So the demarcation lines in the dollars 95.9 and 95.60. And as you can see, if you go all the way back, that 95.55, 95.60 level, which is here, you know, came into play here, came into play here, came into play here. So let's see if we at least get a bounce up there to 95.60, and then if we take out 95, then we're headed lower. So, you know, the trade that I'm looking at right here is that the yen may get a bounce on that dollar and a recovery in the market. Euro, you know, this too was trapped. I thought I'd have a chance at 15.20. Still could happen. Let's see what happens down here around 15.20. And the gold, you know, I know everyone's starting to go crazy about gold. Now, I'll be interested in hearing what Steve says, but, you know, we're almost at one of, I think, Steve's objectives. I think it was, you know, equality on gold took you to, you know, this was 60, so 60 from here. This was 65. So, you know, 1245 or so. So, you know, we're like a day away from 1235.
1238 is my second objective.
Okay, so we're almost, you know, completing, if this is going to be a bear market. You know, a lot of the bulls think we're starting something major here. I personally don't. You know, I don't think that markets bottom like this. And eventually, I think it's going to be a great shorting opportunity for 1160 to give way because of this. So, you know, maybe this has another week left in it, and something that isn't really confirming. You look at how good gold looks, and then you look at silver. Well, silver, if it gets through this 1490, could extend, but you look at it, it hasn't even gotten back to its high during this first wave, where gold has way surpassed it. So silver showing relative weakness to the gold. So you see this high here, and silver hasn't taken it out. You see this high here in gold, and gold surpassed it by a mile. And in fact, Steve, you know, what you might be getting here is 1, 2, you know, we do a little work, maybe pull back and finish the thing off. So I wouldn't be chasing the gold here. Maybe the gold comes off during the, if we get that recovery in the S&Ps and the NASDAQ. I'm, you know, licking my chops for a recovery in NASDAQ. I'd love to see it. I don't think we're done. My overall target in the NASDAQ is here. If I'm right, we're going to travel all the way down. This was 800, okay? And I was looking for an 800 point decline in NASDAQ. You know why? Because back in January, this was 800, this was 900. So I was looking for some type of symmetry here. And that's what we got, an 800 point decline. And now I think that if we take that out, we get 1.618 of that. It's going to be about 1,300. So if we top it's 73, 74, you're looking at the low 61s. This was kind of a line that I had. Where was that? That gave me 58. I think this was it. Also, that 69.20. If you notice it, I don't think this is it. That's not it. But look at the weekly moving average, how it held. Okay, I have too many fibs here and missing moving average. But under last week's low, all the indexes are in big trouble. So I encourage, how are you guys? FX, Len, Craig, everyone doing okay? You know, we have a great interview today. Saeed Zaman's with us, Trader 1SZ, and he has quite a following, caused quite a stir that he was going to be here on Face today, so stick around for Saeed. Last tweet I caught, he was pretty constructive on the euro, you know, even if it had pulled back towards 113, so we'll get updated on that. Should be an excellent interview and great intelligence gathering. And so let me just turn it over to Blake. And Blake, I hope you'll forgive me. I didn't watch your weekly preview of the week ahead.
What?
Yeah, I don't even have a note or anything, any excuse. So, you know, I'm ready to go to the penalty box.
Oh my God. I thought we were like friends.
But I promoted it and called you a true pro, that everyone should do it. So I tell people things, you know, do what I say, not what I do. So anyway, buddy, now now I'll know what you're thinking anyway. Right?
Well, the thing that I did note on the week ahead video is I was really discussing this trend line in the dollar yen, which we did test overnight. I mean,
you showed that last week. I
did, and I really harped on it on the week ahead video because the point I wanted to make here is that the S&P, the NASDAQ, okay, the Dow. Okay, those weren't going to break as long as that trend line is holding. And if that trend line breaks, then we have to be on the lookout for a down move in the S&P, or vice versa. I mean, if the S&P broke or the NASDAQ broke and the dollar yen hadn't, the dollar yen was probably going to break. So actually, when I got up this morning and I sat in front of my computer, I closed a gold long from Friday, and the reason why I picked up gold on the long side, if you guys were in the chat room, it was pretty simple. I mean, we were just sitting down here basically at the breakout point. So, you know, gold broke. It was sitting down here at 112.18, and I'm like, oh, I want to be long right now, and so I went long.
Right.
I sold it this morning. When it was up here at 12.30 and change. So, but you can see the really big divergence in gold on an intraday.
Yeah.
I'm like, okay, well, I wanted to get out of that. And I was short euro yen over on Friday. I closed it last night actually. So I was short at when we closed at 129.66, I think it was. And anyway, when last night it was trading at 129.45 when I got out, but it dipped almost down to the 50%. But anyway, the point I was making for the week ahead video is, as long as the dollar yen trades above this trend line, which you can see right here, as long as we trade above that trend line, then the equity markets are, how should I say, safe. I don't want to say safe. I mean, but longs can try to play it to the long side. If we break through this trend line, I wouldn't want to be long equities. I wouldn't want to be long risk. And if you look at the Nikkei, which I did tweet out this morning, here's the Nikkei 225. You'll notice here. Let's go over to the daily. We hit this trend line today to a T, and also we produced a false breakdown in the Nikkei overnight. Now, that doesn't mean that we won't eventually break. I agree with what you're saying, or what you said a little bit earlier. I think that the dollar yen is eventually going to break down, even though I played it on the long side this morning. I bought it at my average was at 78. I sold it at 88. I believe this trend line is going to break, but I think we do this first. Okay, I think we bounce and get some sort of bounce into maybe the 112, 112.15, maybe even a little bit higher than that before we actually crack this long-term trend line lower. So what does that mean for the stock market? Well, that means that the stock market, and if you haven't seen it, we talked about this on Friday on the Face webinar. I said, I think we're in some sort of consolidation on Friday at exactly this webinar on Friday morning. We were right here. And I said, you know, I bet we're going to just consolidate for Friday. We did. And we have, you know, consolidated pretty well. Now, the question is, does the S&P break higher? And if it does break higher, and I talked about this during the week ahead video, I think the risk appetite is going to break a little higher today, and then roll back over on, you know, like to Tuesday or Wednesday. So I do think we're going to get a lift here. But if we don't, we're going to see it in the dollar yen. So, you know, and I could very easily be wrong. But if you,
what's the width of that triangle, Blake? It looks like what,
right now,
2790. Yeah,
I mean, right now the consolidation is only about. I mean, this is only about 15 S&P points now.
No,
so.
I mean back to the beginning of it. It looks like
right
almost.
Here?
Yeah.
Oh God, yeah. We're you know, 2794 to 2700. So you're 2707. So you're talking about 90 S&P points. So
yeah.
You know,
850.
Yeah, but I think that would be probably a little
aggressive.
Yeah, I think it'd be more like this. It'd probably be like a minimum expectation of wedge break. So I mean, we could, you know, possibly get up to 2820, 2815, something like that. I think that's doable. I think if you're trying to get the full extension of the wedge, when you're going counter trend, it's going to be hard to do. I think it's going to be.
Okay, good point.
Yeah, it's going to be something like this.
All right.
Something like that.
I'm just curious.
Yeah, I mean, it could. I guess, you know, it depends on what the news stream was that pushes the S&P out of there, but again, I wouldn't expect all that. I would expect maybe a move, you know, 28.15 might be it. But anyway, so I think that we got to be prepared for a potential move out of this wedge. Could be today, could be, it looks like it's going to happen today. Obviously, we're not going to tighten any further, you know, more than the next couple hours. So,
yeah, they'd have to halt trading for us to stay in that compressed triangle.
Right. We are definitely going to be breaking out today. Now, whether the breakout produces a severe move or not is to be seen. But we have retail sales data today, and you know, that's the one thing that I didn't do on the week ahead video, which I meant to do. I talked for 18 minutes about like the S&P, the dollar yen, you know, I went over the euro and, you know, all the other stuff, and I forgot to talk about, you know, what's happening this week. We do have retail sales today, so and you know, that's going to be a potential market mover. But you know, all in all, I think that risk appetite has gotten slammed down pretty good, and we are really, you know, we're still oversold on the S&Ps here. You know, you look at the daily relative strength, I think we can work off a little bit more of the oversold conditions. Daily sentiment index was registering a pretty ugly number. I forget what Friday's number was. I think it was 10. Thursday's number was 10. Friday's number's got to be better than that. I have to go back and look. I forget exactly what it was. But anyway, I do think that equities are going to, you know, bounce a little bit here, and that should take the U.S. dollar Japanese yen probably back above 112, and you know, the Nikkei will probably bounce going into Asia tonight, I would think. I mean, but the flip side is if the dollar yen breaks out 111.60, the S&P is probably going a lot lower, and same with the NASDAQ and everything else. As far as the rest of the market goes, you know, I did mention that on the week ahead video, I'm really indifferent about the dollar. I still am. I don't know what to do with the euro. I'm not a euro bull. I'm not a euro bear. I think it's a pretty messy market. I don't have a good read on the euro as of right now. The cable, you know, we had some. I think Prime Minister May, I believe, is going to have a press conference today, and really we're in such, I mean, you know, we're really deep in the weeds with Brexit talks right now. I'm not really too sure what to do with the cable either. All I know is that we are making lower highs, and that's a little bit of a risk to the bulls technically. The Aussie, it actually firmed up pretty good, and actually the Aussie is at the upper end of its resistance zone. This really, you know, and actually let me do this. Let me do that. Like that. The Aussie really needs to reject here, and if it doesn't, the risk, oh shoot, I didn't mean to do that either. It's the 38% retracement. Okay, there we go. The risk here for the Aussie is if it breaks higher, it's going to squeeze, you know, right here. And I don't think you can rule out a squeeze here in the Aussie. The risk reward is to short it right now. Like if you're like, you know, if you're purely looking at technicals and you don't care about anything else, the risk reward is to short it right at this moment. I don't know if that's the right trade. I'm just saying that would make sense, because if we do break above 71.50, then we should start to squeeze higher, you know, towards 72 cents, maybe even towards 73 cents, which would be the upper end of the channel. But the Aussie is really, I mean, it's there, and the Kiwi too. I mean, the Kiwi is right up against previous support, and that's acting as current resistance. You can see it right there, right? So the risk reward is to short the Kiwi as well. Again, I don't know if that's the right trade. I'd be a little hesitant here, but you know, it is a setup. The dollar Canadian, you know, actually, I'm surprised the dollar Canadian's looking as good as it is, despite the, you know, the expectations of the Bank of Canada to hike, you know, another 3 times. The dollar Canadian you would think would be a lot lower, but it's not. It's actually holding up pretty well. But if the Aussie breaks higher, the Kiwi breaks higher, the dollar Canadian, you would think would break lower. Now the S&P, I got to go back and reference it right now. We are up right up against resistance here, so be very careful if you're short equities. And I do think the risk is that we break higher today. You know, not 100% sure that we're going to until we start doing it, but at least I'm not confident in it. But I think that is the risk at this stage. And let's see, the dollar yen. You know, I had been playing this on the long side. I bought it down here. I think if we break above this 111.90, 111.92, 93, we should start to squeeze, you know, up towards 112 and change. And that's really what I'm looking at this morning. And I'm going to pass it over to Steve and Stelios here in a moment. You know, ahead of the retail sales, but wanted to talk with these guys a little bit. Good morning, Steve. Good morning, Stelios.
Good morning,
Hello,
Blake.
Good morning.
Hey,
Hi,
guys.
everybody.
How are you doing?
Very well, very
I'm
well.
good.
Thank you.
Good, mate.
Good. So,
How was your weekend?
yeah, it was good. Except, you know, it's always difficult. Mondays are always difficult for me because I have a harder time falling asleep on Sunday night. You know, because
Makes sense. Yeah, makes sense.
and then obviously Monday mornings are always really rough trying to get up. But as far as you have a crude short, Steve, a pattern in play. Why don't you talk to us your thought process about that? What was your idea behind crude?
This looks like an incomplete move to the downside. I believe that we're headed higher in the longer term, but this looks to me like a nice bear flag, and I do think there is one more leg missing, at least towards 70. So, you know, the reward to risk ratio was appealing, and, you know.
So something like this.
Yeah, exactly.
Okay, all right, I got it. And you expect maybe another move lower. I think if we break below 71 in crude, I think that's going to take us down towards this upward sloping trend line over here.
And you know, all this conversation, and threats, etc. I've seen the market so many times react in the exact opposite way that, believe it or not, it even enhances my belief that it's a worthwhile, attempt.
I see. Well, good. Well, I hope that breaks down for you. And one of the things I like about this, and I have no position in crude, but one thing I like about this is that you had this false breakout up here, above the $75 level. You can see that false breakout right in the major 618 retracement. So I still. It
was also a very, very nice confluence of resistances, because it wasn't only the 61.8, which you very correctly have up there, but it was also the exact target of the inverted head and shoulders formation that we had. So, after hitting that confluence of resistances, crude turned lower. Initially, I thought that it might just be like an ABC kind of move, but seeing that, the second leg lower was somewhat stronger, and having the area at around 72.50 to 72.70 as an area of resistance, and seeing the initial reaction today getting rejected from there, gave me more confidence that there is at least one more leg missing to the downside. So that's the thought process.
Awesome. All right. Well, I'm going to pass you over the charts, and I'm actually going to trade this retail sales number. I think that the S&P is really set up for a break here. So, we've really tightened since Friday. Everybody should be on the lookout for a possible move out of that triangle, or that wedge triangle today in the S&P, and that might produce us some volatility. Because we kind of got spoiled this last week with some pretty good volatility. So hopefully that spills over into today.
I don't think that volatility is going to immediately fade away. So I think we should have another interesting week. I don't know if it's going to be that interesting, but definitely I doubt that it's going to be boring. You know what I mean?
All right. Did we have a pullback, Steve, in VIX to the 17 area? I mean, it didn't close that great. And Blake, good hunting today, brother.
Thanks, guys. Have a great trading day. Thanks.
You do, mate. Yes, Elio?
Sorry to interrupt. Sorry. We had 1.5 minutes to the numbers. I think before the numbers, probably worth mentioning our sponsor, Forest Park FX. This webinar is free, and it's free because it is sponsored by them. And if you have any kind of questions, anything you want to ask about brokers, service, anything at all, we have Trent and
First
Justin
of all,
there.
if for some reason you haven't tried ForexAnalytix, you can always do that for just $1. It's a 10-day full access to our services. And as Stelio said, this is also...
And Steve, don't forget to tell the audience that if they really feel they got zero value out of their 10-day trial for $1, that I mail a $1 bill to all of them, postage due.
Correct. Plus, as Stelios mentioned, Forest Park FX is the place. They are the people that are going to guide you to make the proper selection for your brokerage. You can even add them as an introductory broker, even if you want to stay with the specific broker you're already using. And through the reimbursement program, you can get your subscription to ForexAnalytix subsidized, or even get cash back, depends on if you're in Europe or in the US. You can find here in the reimbursement program page the Skype contact and the email contact for them. Stelio, I'm getting back to the data though, yes, because we get retail sales coming out
in 10 seconds.
Any second now. So let's first see what kind of a reaction we get from the markets, and then we're going to go through the charts. Let's see what we get.
Yep, we have Empire State as well, manufacturing. Empire State is slightly stronger. Retail sales is weaker. It's negative. Core retail sales negative 0.1 versus 0.4 expected. So that's not good. And revision is also lower.
So both data negative. But so far we're not seeing any big reaction. I mean, I'm looking at the Euro USD here. I'm looking at the USD yen. Really, the market seems to be unfazed to begin with. US Empire Manufacturing was higher, 21.1 versus 20 expected. So at least that was higher than expected. But retail sales, as you mentioned, weaker. We're now seeing a little bit of a dollar weakness, but really nothing to write home about. Okay, so we're going to keep monitoring. Let me know, Stelio, because I'm going to be focusing one chart at a time. Let me know if you see some kind of a move taking place. Let me know so I can switch back to it. But we can, let me first see if we have any questions, and I can begin from them because I anyhow have some things I want to show. Okay, we have questions for pound pairs. Yes, we're going to have a look at them. Nikkei, Blake already covered that, but I can have a look at it as well. Okay, so let's begin by having a look at Nikkei. I know that Blake showed it, but I want to briefly show it as well. I said that the fact that we failed after posting like 27-year-old highs is a very negative reaction. The fact that we breached back below the 23,000 area of resistance, this time it could have acted as support. It didn't. It was also a very negative, development for the market. And the fact that we're actually breaching below this ascending trend line, you can see how far back it dates, is also negative. And 22,000 is going to be an important zone. I think if we breach that as well, we're going to be talking about a very, very bearish development, because we will have in our hands a false break higher and a complete reversal with a lot of momentum following it, right? The other index that is breaking down is definitely the IWM. The IWM has broken below an ascending channel that has been going on for more than 2.5 years now. And the fact that the daily, after seeing a very nice divergence on the daily RSI, the fact that the daily RSI is now at a reading of almost 16 is showing that this is not a move that you should dismiss as a corrective move, because very rarely you see something bottom out after such a strong impulsive move lower. In any case, that means that I would expect that any reaction higher towards the 160 area should definitely find sellers, if we even make it back to that, because we might even get rejected from an attempt to retest the broken channels support, which might act as resistance. So IWM, I think that from a technical perspective, has broken down in a very bad way. Nasdaq retesting horizontal support resistance area. I would be quite careful here. It doesn't mean that we can't breach above that, and there are more levels to watch. If we do break above that, I would be watching for 73.70 as the next area of resistance. Perhaps below that, 7300, very likely as well. We had highs, lows again here. So 7300, but be careful because we are currently at resistance. Now, having to do with the S&P, Blake already showed, this is the daily. He showed on the 4-hour chart that this might easily be a triangle, but you know something, in corrections, you can never be sure if that's going to end up being a triangle, if that's going to end up being some kind of a bear flag. But one thing is for sure, it doesn't look like we're done pushing lower. So I would expect at least one more move to the downside in the rather short term. I mean, we can end up rebounding for a couple of days, but in general, I would have to say that I think we're currently trapped in a broad range, because 2690 is a very critical area of support resistance. 2790 is also a critical area of support resistance. So 2690, 2790, as long as we stay in that area, we might just end up consolidating. At a break above 2790, I think that the next area of resistance is 2815, and above that 2845. In any case, though, I would not expect that the index can rebound higher than, let's say, at the best case scenario, retesting this broken ascending channel. Yeah, before actually producing a move lower. So it might produce a move lower from here, or worst case scenario, at the at the most bullish case scenario, something like that. But I don't think that we're going to make it all the way up there. That's, in my opinion.
Steve, fair market rallies defined the character of them: brief, sharp, but not long lasting. So some of them are very sharp as far as, in points, and they're dramatic looking. So that's what I would love to see is, a couple of days that just squeeze the shorts, and it's dramatic, but, any correction doesn't last longer than the end of this week. That's what I'm thinking.
I totally agree with you, Coach. You remember how long ago we started talking about the potential of the DAX,
yes,
to switch subject, of creating this beautiful long-term head and shoulders formation. I kept warning that the index looks like it's very heavy, and it looks like it does want to make the move below the 11,800 area. It finally did so. It did so emphatically. It closed the week below it. And now I'm going to go back to the daily chart to show you where it actually found support. It found support at the confluence of a previous support area, and at the same time, the 161.8% extension of this last rebound that it produced. So a rebound from here wouldn't surprise me, but needless to say, you should expect that 11,800 to 11,900 is now going to be a very tough area to crack to the upside. And I think that any rebound towards that area is going to produce a very nice selling opportunity. I believe that a lot of people are going to be looking to short that area. I'm going to be among them. So we might even break down from here. But if we do rebound to that area, I think that the reward to risk ratio is going to be extremely appealing to look lower. Now, having to do with the FTSE actually surprised me, because when we were here, I expected that the rebound is going to be like, a soft consolidation, or, something like less than, what we got. I expected one more move lower. So unfortunately, I lost the opportunity to be short because I got surprised by the momentum of the rebound. But what didn't actually change is the fact that once the index got rejected, we got another move lower, which clearly looks impulsive, right? So we're now about the next area of support is the previous low here. We've almost completely retraced this very strong move higher. So the FTSE doesn't look good either. Having said that, expect the 7,100 area to act as resistance from this point on, in case we rebound and retest it. So having covered the indices, I wanted to mention something else that is important, which is the bonds. The fact I want to mention the bonds before we go to the metals is because, first of all, the 10-year Treasury, after breaking down below the symmetrical triangle, which was very clearly, a bearish consolidation, it broke down to new lows, and after finding support at the 127% extension of the maximum width of this triangle, it's now rebounding, but is finding resistance, unsurprisingly, at the previous low. So be very careful here, because we can very easily get rejected from this area, since it acted as support a couple of times. It can easily act as resistance in this occasion. But if we do make it above this area, I think that we will have a hard time rebounding higher from this confluence of resistances, of these broken triangles, support that might act as resistance, and this horizontal support resistance area. So the reward to risk ratio favors shorts, as long as we're at the current level. Perhaps if we get rejected from here, I think that the next area to target is going to be the 161.8% extension of this triangle, which comes at 116.5 roughly. So I wanted to show the Treasury because it's at an important, juncture. And having to do with the bund, let's first have a top-down analysis. Let me show the weekly view of the bund because it's quite important. And the weekly view shows us that after a very, very strong bullish move, we've had a corrective move lower. We're still within a corrective move lower. How do you know it's corrective? Simply because the characteristics of the move higher are clearly impulsive, while the characteristics of the move lower are clearly corrective, because the price action is slow, it's choppy, it's overlapping, it's annoying, and that's exactly what you expect. So eventually I would expect that this should produce some kind of a break higher that might actually coincide likely with like the next recession or the next crisis or whatever, if we get the bonds reacting in the way they usually have been reacting in the last couple of financial crises we had, because that's not a given. I mean, generals are always ready to fight, the previous war. As I've said, I have a little bit of, I have a little bit of a doubt that we might get the same situation in our hands. I wouldn't rule out that in this case, in the next financial crisis, we might get stagflation, which not a lot are expecting. In this case, the bonds would react in a different way, but from a technical perspective, a move higher looks likely. Having said that, I want to show that the bonds are currently testing support. First of all, we're seeing RSI divergence. Second of all, we're seeing that this area was a previous area of support. So we're seeing a little bit of a rebound, but in any case, this 159.75 zone might act as resistance once again. The bonds do look, bearish in the short term, but I wouldn't expect that a break lower below this trend line is going to be easy to accomplish. But we might get another leg lower towards that, right? So I wanted to cover the bund since we didn't do that at the end of last week, and now we can go over some of the questions. Yeah, okay, so we have a question about the USD TRY, and the question is, it looks like we have a very big breakdown. Is that the case? No, it isn't, in my opinion. Because I had said here, that there are three scenarios having to do with the USD TRY. Of course, somebody can say there are three scenarios with anything, so you actually said nothing. That's not exactly the case, because in all three scenarios that I had in mind is that the move higher is not done with the USD Turkish lira. So we had said three scenarios. One scenario, triangle, which was my main case scenario, a triangle, so a consolidation in time before moving higher. Second scenario was, an immediate move higher, which I didn't think it's very likely because we had already seen a parabolic move to the upside. Another scenario was like some kind of an ABC. So yeah, I do believe that the Turkish lira can retrace quite a lot more than what it has already done. Now, do I really believe that the rout in the Turkish lira is over? I think that we need to see a lot more evidence before we decide that something like that is the case. But now that we've broken below this trend line, yes, I do think that there is more downside in the Turkish lira. I wouldn't even rule out an eventual pullback to 485, which is, much lower than we currently are. So yes, we might see the USD Turkish lira retrace quite a lot more than it has already done, since we've now broken below the triangle. But I don't think that eventually that's going to prove to be like an all-time high. Okay, so being short against specific objectives is not a bad idea, but it's a bad idea to keep it as a long-term thesis. Now, having said that, we have questions about the pound pairs. So let me say here that, first of all, I remain of the opinion that anything between that having to do with the cable, that anything that happens between 130 and 133 is purely noise. So I wouldn't be doing anything as long as we are in the middle of the zone. regardless, we gapped down. We've now closed this gap. So given the fact that we got rejected from the bottom of this 133 support resistance zone on Friday, I wouldn't be surprised to see the cable move lower from here, even intraday today. Just an intraday comment. Intraday is not my trading style, but I'm mentioning it since I'm looking at it now. Another thing to notice here is that there is a very good chance that the pound yen is failing. I would have loved to see this being a triangle and an eventual one more push higher towards the 152 area. I would have loved to, short that zone. There is still the chance that something like that will happen because, let's say, perhaps this is not a triangle and this is a bull flag, in which case we're currently testing support. So there is still a little chance that we might rebound from here, eventually get one more push higher, in which case, as I said, I will be a seller. But if that's not the case, then I would expect that we would soon see the next area of support being tested at 144.50. My longer term bias remains bearish. Why? Because we've actually broken below this long term formation, which had clearly corrective characteristics, right? So I'm now just looking to see if we're breaking down from here or there is one more leg missing higher and we will be breaking down from there. The RSI so far doesn't show impulsive characteristics, so there is still the chance of one more move higher, as I just mentioned before. Now, we had questions also about the pound Aussie and the pound yen, and I think that it's very interesting that both the pound Aussie and the pound yen got rejected from channel resistances, right? I posted that on the week, on the end of week analysis. So pound Aussie, after breaching to new highs, found resistance in this ascending channels resistance. It seems to be trying to break below this horizontal support resistance area today as well. That's going to be quite an important level. But let's see, we're still early in the day. It's important to see if it's going to hold this 184.30 area before we can even start talking about bearish case scenarios. Same thing about the pound Kiwi. The pound Kiwi consolidating for a big period of time in a symmetrical triangle. Triangles have the tendency to break in the direction of the trend. The previous trend was obviously higher, so that's exactly what happened with this triangle. Not only it broke higher, but it came down, it retested the breakout trend line, it pushed higher once again, found resistance now in this ascending channel resistance. It hasn't even retested the previous high, which is at 2. So, let's not jump into conclusions, into believing that this move lower is impulsive in any way. It can still be just a pullback. Let's see what this previous resistance at 2 is going to do before we take a decision. Grega?
Hey.
Hey.
What's up?
I just saw that. I'm good, mate. I just saw that you joined us. I heard some noise from your microphone. We have like 11 minutes until the interview. I'm here every single day, so let's not lose any time. Since you're here, I bet that you have something to share with us. So I'm just straight away passing the screen to you. I'm very curious to see what you're thinking about this. Did you get the screen, mate?
Just a second.
Yeah. For those of you that don't know, Grega is our Elliott wave expert. He is, the go-to man for Elliott waves. Probably the best Elliottician out there. I'm not saying it because he's our partner. I'm saying it because if you've been monitoring his work, you've seen it on your own. Grega, clearly some impulsive characteristic in this move lower in the indices. I'm pretty convinced that the move lower is not done yet. I would expect more weakness before higher. What do you think?
Yes, I think that a lot of fear has been put into the market last week. So since market was not recovering much on Friday, I just think that we are consolidating before we see another push to the downside. But still, whenever we're looking at some evidences of a top, before we come to conclusion if this is a top in place or no, we have to make a step back. Okay, now stock market normally when it sells off will follow very sharply because of fear. So actually this is personality of the stock market moves. It moves really sharply and fast to the downside, but it recovers much slower. That's personality of the stock market. And if you look
it's what they call up with the escalator, down with the elevator.
Yes, exactly. So actually, if you look at the price chart, this is Nasdaq 100 since 2000. You can always see that each decline was very sharp. Okay, so the important is that after a very sharp decline, the market again recovered. So rather than calling some significant multi-year top, I think it's the proper approach is to identify potential support levels from where market again could turn to the upside. So I'm looking at this price chart from 2002 lows on Nasdaq 100, and I can see waves 1, 2, and this parabolic rise that we can see, it's probably like a wave 3. And if that's the case, then we are now in a wave 4. Now, what I notice is that stock market also like to make flat formation. Flat formation is a 3-3-5 pattern where you see first move to a new high, then you see a pullback, and then failure break to a new high, where a lot of traders, investors were probably looking for new long opportunities.
And then get trapped at the worst possible point.
Yes, and then you will see another move to the downside where there will be another failure push, but on the opposite side. So actually, in such case, market makes 2 failure breakouts before actually continues to the right direction. So I think that actually would not be surprised if this was a failure break here for a new high for a wave B, and now we are headed down for a wave C for another failure. It was the same situation here back in 2015, where I'm sure that personality and even actually investors' approach was very similar like we have seen in the last 2 weeks. So my idea is that this can be only wave 4, and if I'm correct, then of course there is room for more downside. Actually around 6,000, 6,300 around there could be actually a very interesting support. Also, if we look at the other indices, I'm looking here for DAX actually. Now DAX came out of a triangle here back in 2012, so I'm looking now for a 5-wave structure, and what I'm tracking at the moment is potential ending diagonal here with wave 4 underway. So if that's the case, then support can be a little bit lower, maybe around let's say 11,000 or so, where I would
keep in mind though, Grega, that we've already triggered with a break below 11,800 a head and shoulders formation, which actually has a target at 10,000. Of course, that doesn't mean that every time we trigger a nice formation, we will always make it to the.
Of course, yeah. But when I'm looking, my primary analysis is still the Elliott wave principle. So
no, I understand. I'm just mentioning it.
Yes, I know. I'm just looking. I know that target for head and shoulders pattern is much lower, but when I'm tracking a counter trend movement like an ABC, okay, the equality level is higher than a head and shoulders target. So for me, as an Elliott wave guy, I want to focus on a potential support levels that can be identified earlier than your head and shoulders target. So actually the first support has already been triggered here last week, okay, where wave C equals to wave A. As an Elliott wave guy, this is probably the most important level where I will watch out for potential reversal signs. However, I'm not saying that wave C has already come to an end here, because we still have to see a 5-wave drop for wave C. So I would be looking for potential drop towards 11,000, and there I would watch out for potential 5-wave rise on a smaller time frame that will confirm that we are headed.
So if I wanted to consolidate the two views, the Elliott wave view and the basic technical analysis view, a retest of the breakdown area of 11,800 is going to be a nice opportunity to be short, and then it remains to be seen if the Elliott wave scenario is going to be played. So perhaps there is not a lot more downside, but there is some more downside to be made for a fifth wave, or perhaps there is a bigger downside because, let's say, this head and shoulders formation is going to come to fruition and we're going to go all the way down to 10,000.
Yes, very possible. But as you said yourself, for now, there's still more downside available. And I think that this short-term structure, let's go to 4-hour chart, is very, this is actually intraday chart, is very clear. You can see that market is actually moving sideways. This can also be a triangle. So clearly more weakness is coming. But we will see how actually maybe this price action will unfold till the end of the month. If we see some kind of a bounce towards the end of the month, then of course I would be interested actually maybe to even look for some long opportunities on DAX. But for now, the market is still hard here and very heavy, and could clearly, as you said yourself, can see more weakness. Also, what would I like to highlight is probably gold. Now, gold money is probably flying into gold when we see risk-off mode. So looking at gold, we have touched a very important level here at 1235. It was old swing low. So if this is going to be a corrective recovery, ABC, then we are now at a very important level where new bears should step in. Okay, so watch out what market will actually do here. If we'll see a drop, a reversal of this Monday's flows, then this could actually be first evidence that we are failing to move above this resistance level. At the same time, also I think that Aussie could finally see more weakness. It's rising very slowly, as I can see, and actually it's not catching the move that gold did last week. So if gold will sell off, I think that Aussie dollar can be much lower.
Okay, we need to stress out though here, because I didn't make it on time to cover the metals, that COTs show that positioning in gold is at extremes. Sentiment was very recently also at extremes. So there is a big danger that if actually gold manages to squeeze a little bit higher, then people are going to start panicking. I mean, there's going to be a massive short squeeze. So I agree with you. So far, we have no reason not to view this as a corrective bounce. But in my opinion, there is a real danger that if this bounce extends somewhat more, it might lead to a much bigger rebound than initially thought.
Yes, actually, if we focus on the 4-hour chart, right, you still see that I'm waiting on a 5-wave recovery to unfold here for a wave C. So clearly there is an idea that market could actually move into these fib levels. But overall speaking, I think it can be wave C, but as you said yourself, it can reach a little bit more higher levels before we may finally turn to the downside. But the very important price chart should be this one on a weekly basis, where I see prices in a wave E. Okay, so that's why I think we have to be aware of potential first resistance levels on a lower time frame chart, because I see price in wave E of this wave B triangle. So sooner or later, maybe this market will turn around, and I think we really have to be prepared whenever this happens.
Out of curiosity, if we reverse engineer an assumption, if gold surprised you and actually broke higher from this formation, how would you then label it? I'm not saying you favor this interpretation, and it looks.
There are always different opinions. I would probably then
alternate counts.
Yes.
Hey, Greg, you know why Elliott was always waving?
Why?
Because he was impulsive. and his wife, but don't worry because he was married, so his wife was corrective. I made it. That's my Elliott Wave joke, man. I made it up. You like it?
Nice. So
I know.
do we have
I'm
questions?
I'm impulsive too. So, huh?
Do we have any questions?
Oh,
Or probably we are out of time, I guess.
Is your guest here? Let's see. Is your guest here?
yeah. Saeed is here.
Okay. So, Grega, why don't you join us one of the next days so we can cover
Okay,
more
sure. I will. I will.
Because
Okay, we're looking forward.
You didn't cover currencies or anything, or I missed it. Did you?
No.
I did. He didn't have time to do it.
Okay.
But join us again tomorrow or the day after or whenever you have some time. Another like 15 minutes. I'm sure people will be more than happy to hear the rest from you. So thank you very much, Grega, and see you all later. Coach, enjoy the interview.
Thanks, Grega. Thank you, buddy. All right. Well, we'll see Grega again tomorrow, hopefully. And thank you, Steve and Stel. And let's go ahead and turn over the controls to Saeed Zaman, just like a lot of his followers have turned over control to him. So I'm interested in talking to Saeed. Welcome back to Face, Saeed. Waiting to hear your voice.
Hello?
Hi, Saeed.
How are you doing?
I'm doing great. How are you doing?
I'm not too bad. I'm just trying to see
you're a little soft, the volume.
What about now?
Still soft.
Okay, let me take it out and put it back in.
Okay.
Sounded wrong, that is.
Okay. Technical difficulties. This is live TV. I don't know, do you have a mic? Or we're using your laptop mic? We didn't have this problem before.
I
better. Oh, he left?
Yeah, better because it's me. Invite him again. I think he disconnected to reconnect again. Perhaps he's trying.
Okay, I will. All right.
I see him.
Yeah, he's back.
Yeah, there he is.
Oh, okay, my trading warrior brother.
Let's see.
See if we get some volume. You're unmuted.
Can you hear me?
Yeah, it's kind of low, but why don't we go ahead? You just screamed during this interview, okay?
Sure. It's never happened before. So normally it's working, this mic. So okay.
Okay, it's a little better. So thanks for taking the time to come back to Face, Saeed. Great to have you.
It's good to be back. Good to be back.
Okay, it's sounding better. You know, I'm very much looking forward to seeing your views on the currencies and what your thoughts are. I wanted to start off by, you know, when you made an announcement that you were going to be interviewed today, you really caused a stir in my stream on Twitter. And I've read some of your tweets, and I know that you teach people. And I've read a tweet like, you don't want it enough. You know, if you want it enough, you'll jump off a building. Right, right, Saeed? Huh? You know, I mean, you know, it's kind of like you have an FX cult following. And I was wondering what you do that creates that type of intensity of how people, you know, become devoted to your teachings. What do you think it is?
I don't know. I think I come across as genuine. I'd like to think that, because people can sniff out bullshit.
Right.
So if I was, then I think I wouldn't have that kind of following.
Yeah.
But yeah, don't know really.
But I mean, they were all excited about hearing you in your interview, and you know, when we had to cancel once, people were disappointed. I just wanted to know if there was, you know, some secret sauce you used so I could steal it from you and use it for my following and make them more passionate
I think if there's
about
only secret sauce, you'd know about it.
Yeah, all right, buddy. All right, so the last tweet I remember, the euro was, coming off, and you showed yeah, that was it, I think, and you showed this support zone in there, your monthly pivots, and it held last week. Kind of got a little bit of a reversal off that area, your magic box there. What are you thinking?
So before I do euro, I'm gonna do dollar because that
go ahead.
More sense.
Yeah.
So I think last time we spoke, I think I was using the same levels here, but these are like more macro levels. So when I'm doing top down, especially when there's a new quarter starting, for example, October, I like to see where are we within the new quarterly charts. Right. So we can see clearly so far on a macro view, there's no reason for me to be bullish just yet. The reason why I'm saying that is because we had this massive consolidation here. This down move smashed it above it. If it was good, it should have held. It didn't. It broke. Retest here. Then we got this candle here, full on bullish candle. Get everybody bullish, and then what does it do? Slam down. Now the way I see it is, if we get a stop run into a key level, then break down the low that caused that high, I'm considering that as a breakdown. So what I then do is, that's not enough. I've got to break it down further, zoom in more, and what I tend to do is draw out ranges. So I've got a high there, got a low there. The green lines are the extremes of the range. And this thin line is the midpoint of the range. Anything above and below it are just deviations. Okay, so if it deviates there, if it gets back below, you can see it perfectly sell off. So right now, yes, we are within the range, but I'm still seeing this as just a pullback. Now, if the 50% was to give in cleanly, then I could say, okay, we're going to target the range high, or at least a decent target towards that level. In this scenario right now, you can see where we've hit that mid-range. We've taken our previous quarterly high, but closed within it. That for me is a very bearish signal. Now, usually when the new quarter starts, with each candle, really, you normally have a wick. Very rarely do you get a candle without a wick. So we've got this candle here. We've caused the wick. Now we're below the open, the expansion phase. So I believe we're going to
that green line underneath it critical, and that comes in at 93.13 or so.
Yes,
I think there's a possibility for that. And then move above 96.
Well, for now, there's no reason for me to believe that. Everything to me is suggesting lower. But if 93. You did make a clean smash through this level here, this gray level, then I would switch my bias to longs. So like I was saying, if I was to say, if this broke, then the objective would be the green line. I don't have to aim for that, but I know there's clear objectives. Liquidity is going to be resting above these highs. There's a thin inefficiency to be filled in, and then just swing highs along the way. So far on the weekly, if I include as a high, a low, so far we're carving out a lower high. We break that, I think it's game over. And I think we come all the way back down into this consolidation here. After that, we'll deal with it. But yeah.
I see. Okay. So if we're rolling over here, we're not going to hold the support level at 93. You're looking for it to retrace the whole range to where we were at the beginning of 2018.
What gives me that confidence, probability-wise, is the what the other majors are doing, and that will take me onto the euro now. So yes, I do believe we could get a little bounce here, but in the overall context, so I'm not going to look at, oh, this is just the support level, it has to bounce here. The overall context suggests to me lower, which means the probability of this breaking, with the overall context in mind, I believe that will break, and the objective will be this. So if I look at the quarterly chart for the euro, if we scroll all the way back, we can see we had this key support level here.
Now I see why you're looking for 27.50. Because I did see a tweet about 20. I think it was on that tweet, the same tweet, and you showed a move to 27.50. Okay.
Yeah. So we've got this, deviation from here. Then we went back above it, and then we held it here. We consolidated for ages and pushed up. So it's gonna be clear when I go to the weekly. So what we had was this up candle led to the move down, took out the stops here. So we should have found resistance there, but instead we broke it. If they were selling here previously, if you broke it and retested above it, there's going to be buyers. So it's a key level. Now, that's not enough for me, especially with these quarterly charts. I mean, you can get hundreds of pips against you. So this is why I'll go to the weekly chart now to clarify things. So if I go to the weekly, we can see we were in a multi-year consolidation here.
Yes.
That's the range high. That's the range low. Nice. This is basically the inverse. But if we look closely, we've got that low. we didn't retest it there. So people get confused when they see like a quarterly chart, weekly chart, automatically their mind shifts. But if this was a 5 minute, this would be support, becomes resistance becomes support. I'd be looking to buy here. So normally you'll see is if it makes a clean smash through and doesn't revisit straight away and leaves like a thin movement there, it usually does revisit later on. And all I'm seeing this, as long as we remain above this range high level, okay, I'm seeing this as a retest, a stop run. And here, when I was watching it, I had to wait. I was waiting, seeing, okay, Mark has to prove to me. How does he prove to me? By giving me a shift in structure. We had this high here. As soon as that high was taken and we couldn't really maintain below the range level here, then all bets were off for shorts for me, at least macro view. Obviously, short term, you can get both.
So that was kind of like a false breakdown.
Yeah.
Before we got back above support.
Yeah. Okay. Now, if it does make a clean break below this, then okay, I will switch my bias and aim lower. Okay. But look at another formation now. We've taken out this swing low. We've maintained that. So look at it in overall swings. That's a low. So it's like a one leg up.
Maybe we get a quality of the first rally from last week's low.
Yeah. So I'm seeing all this as a pullback. And looking at last week, this weekly candle took out previous week's low. And then closed within it, but we didn't take out the high, so the stops are going to be resting there. So this is more of an idea for short-term trading, and which can evolve into more of a swing trade. But the key point to note here is we took out September's low. Now I've marked out September's low with this thin faded line here. But look, if it was good, why didn't we stay below that? And the key SR level here as well. Attempted it, sold off, and then once we got back above it, we're not really getting back below that September low. So I think it's going to be pivotal for it to stay above September's low. And then I think we're going much, much higher. There's no reason for me to believe lower. Now, obviously, you can be prepared for the downside. So like I said, on a macro view, if it breaks below this brown line, then I'm saying we're going to go lower, most likely. But as it stands, I'm looking for any opportunity to go long. So there's two ways. From the weekend, I was looking to go long here. For this low here, why we had stops resting here. If I had that bullish pattern, bullish confirmation here, I would have gone long, but it didn't. It just scapped here. Now you gotta be prepared. What if it doesn't come to this level? So what I'll be looking for is, okay, I've got the monthly open. So this purple line delineates the monthly open. If I get a clean smash above the monthly open, that means we are into the body phase of the candle. So that means we're going to get the expansion, and the wick should be in for the monthly. So we're playing around with it now. We're flirting around with it. And another thing to notice is look at recent months. The body, small body, small body, small body, small body. You know there's going to be an expansion coming soon. So at the same time as looking for entries, we've got to have good targets in mind. So my target is this gray box here, which comes in around the 1.19 level. So that's what I believe we're going to head to. So what I'll be looking for, if it doesn't come to that level I've marked out, a clean smash through the monthly open. We've got SR level there anyway, retest, and I'll be looking for short-term targets into here, and then there, and then into that. After that, I'll have to see what happens.
So that's about a quality from the rally we had in August to the recent high before the pullback to 113. So it's about a quality there. All right. So great view. I know you've tweeted me about US dollar yen before, Saeed, and that had a pretty tricky move when it got over 114, squeezed out all the shorts, and it's been down since. Wondering what your view is now with your pivot work.
It's me on this way up, I've got to say. But again, using the same logic, okay. And this was the chart I showed you back in December. I remember last year. Range high, range of 50%, and I've still obviously you have more levels to grow, but the macro levels still hold key. Now it's amazing how it's just held again. It cannot close above this level. So last week sort of confirmed. Like obviously this week was this weekly candle was more of a confirmation. Further increased the probability. So I am very, very bearish. Now what would increase the probability further is if we were to make a break below this, then I think that opens the gates for the 108 level here. So on a daily, question is, people say, okay, it's one thing saying, oh yeah, I think it's gonna go lower, but entry is a whole different ball game. Where are you gonna enter?
How about 1270 to 1306? I saw you had a gray area box there.
Yeah, so the reason why I marked that out is it comes down to breaking it down, which one's more probable to go. So if we see that's a key level here. Now the way I look at it is if it's a swing high and I've got a reaction out of it, that means that something here is significant. Okay,
Right.
so here
Right.
you can see the tick was there, but then when you had a bust through that level, daily close,
Right.
okay, it led to that next key level, acted as a magnet. But the moment it got back, it found a bit of support there. But when it closed back below it, okay, look what it did.
Yeah.
It sold off. So that's telling me market should be, if as long as it's below this high here, I'm considering this as a deviation. Okay.
Okay.
That's
Yeah.
like a fake out. Now that's back
Sure
below it.
was.
Go lower. So the question is, how do you get on board? Now, I was looking for an entry here, because this was key support level, and there's a strategy I used, the Monday's range strategy, where that's Monday's low. If you cleanly breaks Monday's lows, find support there, a resistance then sells off or breaks down, then I can get back on board. In this scenario, you didn't. The question is, maybe it may leave you in. So ideal scenarios, I know that I wanted to stay above that high there. Now, if I was a swing trader and I got a big target, there's nothing wrong with me entering here with a stop loss there. Yes, it peeps 138 pip stop loss, but my target's this. Now, one way I can do is start scaling in small, as long as it doesn't breach that level, okay?
Right.
Or I'll wait for this. So what I do know is ideal scenario would be there, moving
Yeah.
to there. And usually, right, moves like here, for example, I usually trade these moves, but on a Monday I don't, because Monday usually you find price like to settle in. So
Follow
in this
through from last week.
yeah, so that's the ideal scenario I'd like to see.
Okay.
If that does not happen, I've got to be prepared for the next scenario. So what we've got happening here is we've just taken our kilo. Now this kilo, is there any significance behind it? So if I just draw a horizontal line across that, you can clearly see how important it's been.
Yeah.
So
Right
resistance there, resistance there. As soon as it made a clean break and retested it, that low led to a 200 odd pip move. So if it makes a clean break below it, I'm expecting the inverse to happen. Okay, so
Right.
now what I'll do is, okay, we had a consolidation here. So if it's gonna sell off from here, I don't know for sure if it's gonna sell off, because on Mondays I don't like trading Mondays. But what I do know is, okay, I'll mark this out. So assume it does hold that level. If it was to sell off from here, then the up move, okay, that's the up candles that pushed it up into that resistance level here. If we get a
Right.
sell off, that tells me that support has become resistance. Sellers have stepped
Right.
in. How? They've made a new low, but not only that, the significant thing is they've broken that key level. If I get that, then any lower time frame price action, like a weakness on a 5-15 minute, then I'll be looking to it's a bit messy there. I'll be looking to sell. And where's my next key level? It's going to be this. If this was to make a clean break, this gray line, which is the mid range, then I think that really does open the gates to much
your
lower
108.
prices. And if you
Okay.
look at the commercial positioning, the commercials are extremely long, the yen. So that lines up as well. And what I'm looking at is gold. Right now, gold is probably one of my favorites right now.
Go ahead.
Super bullish. So what I'm going to do with gold is quickly go to this chart here. Let's point this out. Looking at historical price action. Now, I'm not looking at the numbers here. That's not bother me. What I'm looking at is when it was here previously and the technicals confirmed, we had a massive rally. So I'm looking at where the massive rallies happened and
Yeah.
what were the commercial positionings. Right here, we're above all of that, and this is like a
Yeah, it's record setting.
So that's not enough. I mean, commercials can do what they want. They can keep prices suppressed or whatever for ages. But let's look at the technicals now. And this is where the ranges really have helped me zoom in. So we can see the leg we're stuck within is from that high to this low. I've drawn the high, the low, and the 50%. Now this is where the 50% is so pivotal for what I'm doing now. So if we look previously, historically, when it's closed above 50%, it's made a significant rally. Remember, this is a weekly chart. A break above on a weekly, significant rally. It goes to that side. Again,
Right.
when it deviates it but gets back above it, it rallies. So look what it's done now. It was held for ages.
Yeah.
But
What
now
was it?
it's
About
broken above.
1208?
This level here, this level
Oh,
about
yeah, it's
12, 10,
flat.
12.
Yeah. Okay. Go ahead.
So we can see how price was suppressed for ages, but
Right.
now it's broken up. Now I look at the COT data and price confirms, because price has to come first for me anyway. Is the yen
Okay.
confirming it? The yen is also confirming it. What's going on with the indices? Similar thing. So for me, my validation level is actually this low here. So I've got a long going with this stop here.
Okay.
So what I would like to see is I'd like it to stay above here on a weekly close basis above this line here. Entry wise, that's a tough one right now because it could easily come back and fill this inefficiency in. So what I'll be doing is, okay, ideally, people can buy kilos or bought here, but where's your risk? If I was to buy here, my risk would have to be this low. As long as this low holds, I feel secure in the position. But what I'll be looking for, ideal scenario would be is a dip actually below this level here, a deviation below it, but I don't need to enter here. So what I'll be looking for is similar to here, find support here, deviates below it, and then once it gets back above it, you know that all this was just a squeeze or a stop run or whatever. So I'd like to see something like this, and then get back above and then find support here again, because this is clear resistance level. So when it does this, this is a squeeze, I'd consider it. And at this point is where I'll be looking to enter. Otherwise, what I'll have to do is, again, the same way I use ranges I've just shown you, I'll wait for it on the lower time frame. So for example, what we've got right now, we've got this low here.
Yeah.
And we've got this low here. So this more comes in line with entry techniques, but what it helps me do is it focuses on where price should go and shouldn't go. So right now, I'll let it do whatever it wants. But the moment it does something like this, for example, either it comes into there or there, but then reclaims that level again, and it establishes support there. Yep. Yeah. Then I'll step in, because it's still keeping a wider stop loss all the way down there. I will need to keep my risk there then, and it's much more. And then my target is actually I'm actually going for these highs here on a swing basis, but short term, obviously, we've got this resistance level here. But that's gold. It's probably one of my favorites. Yep.
Okay. That'll be your tagline for the video. Yeah, you gave it to me, buddy. So I am getting a couple questions from the audience, and do you want to take on either USD CAD or
actually, can I do another pair that I normally don't do, because I think there's something big going on. Then I can answer whatever if you've got time.
Yeah. Okay. Sure.
This pair here this really has got my attention right now.
Euro Aussie.
So we've got this, right? I don't really trade this, but I used to back in the day. But now as you stick to the majors. But that's a range high. That's a range low. We're breaking out of a multi-year range. Now, if we look, right, we had attempts here, but things are looking different now. Attempts here, okay, above failed. There's only so many times and for so long they can keep this in a consolidation for before it breaks out. Now, what was the make or break point is what's happening right now. We've broken out of it. Okay, we got back below, but then immediately broken out of it and we stayed above it. When was the last time we had so many monthly closes above it? It's been a long time. So as long as it stays above this green level on a monthly, this means we could have a huge breakout. And if I was to do measured move of this, and this is the same for the Euro New Zealand, Pound Aussie, Pound New Zealand. So I just need to do this, and you could do the same for the rest yourselves. But this is really, really looking nice. I think this is in for a massive breakout, at least a minimum target into another 900 to 1,000 pips. It'd be a fool to say no. But it's like these kind of trades are like running in the background while you day trade or whatever you do with the majors. So on a weekly basis,
it's like background music for you. Elevator.
Yes, so okay. I have.
Good one. All right.
So so this is a level to keep your eye on, I believe. And what we've done, we're retracing back now. That's fine. But what we have done is this is previous month's low. I shouldn't have drawn that, but okay, previous month's low here. Okay, now we've taken out the stops at previous month's low. We're hinging off a key pivotal level, which is here. So this down, we pushed the market up. When it broke below it, resistance, sell off. Clear, if proved itself by finding resistance here. It broke above it, found support. This time, it took out the stops, cleared that previous month's low, previous quarter's low, and then rallied. And I'm seeing this as a breaking market structure. So short term, as long as this low holds, I think this is bullish. Now the question is, again, does it come into here, or has it already done its thing? So in this scenario, I'll use a Monday's range where I'll let Monday unfold. But I think this is really a currency pair to keep your eye on for a massive move, at least risk reward wise.
All right, background music. First time I heard a position trade described that way. Background. So were there any other pairs? We have a little bit of time, but I want to make sure. I went to your website, so I don't know if you had it last time, but I want people to know how to get in touch with you. You're teaching people, you're doing webinars. You have a service now. So you want to show your website and how people can reach you?
Yeah, I mean, I wouldn't say it's like specifically teaching. I mean, there's loads of stuff out there that you can learn. It's more of an analysis I do. Like, I mean, you can learn from it, obviously. I mean, just because we label it something doesn't mean it's not. But like, for example, say what I've done now, that's what I do. So, but in this, you don't have to sign up. There's plenty of free stuff. I mean, I got free I got quite a few free videos here and on my YouTube channel.
Okay.
It's just mainly analysis I do, and a few live trading sessions during the week where
Well,
people watch me trade live.
I think I was probably talking about your premium access, that you do have, you know, a business model for people that get it, you know, unless you just want to win the Nobel Peace Prize for humanitarianism.
Let's be honest, it's all about the money here.
There you go. All right, that's a Saeed I know that I see from tweets. You'll do anything. You'll jump off a building if you want it bad enough. Okay, so you want to cover? I got a couple of requests. One was
yeah,
USD.
whatever you've got.
All right, USD CAD and cable, and then
I'll do cable, and then I'll do
cable.
Okay, so cable.
Because I know you're not worried about Brexit. You're looking at your lines.
To be honest with you, you know what it is, right? Everybody's moaning all over Twitter, social media, this, that, the other. But at the end of the day, price will tell you what's going to happen.
Right.
And even if it is a Brexit news come out, who's going to actually trade? For example, when it was the Brexit deal, who's really going to take a position ahead of a Brexit news? It's ridiculous. I think it's just noise, and people like to get hyped up. And it is what it is. Human nature.
Yeah,
they like
right.
hype, hysteria, and that's it. But price, I mean, for this, I'll have to refer to the Euro GBP first. Euro GBP, I mean, I was wrong on Euro GBP where I was looking for a long here, and it went up, and I was getting excited, and it smashed through my level. So, I mean, don't get me wrong. If I'm bearish dollar, I think cable and euro will both rally. Questions: which one will rally more? Now, with this situation right now, we're at a key support level here. Okay, we're at a key support level now. If I'm correct, if for me to get bullish, okay, market needs to do this way. Okay, I was looking to buy within this gray box here. It's proved itself previously by giving me massive moves. If it gets back above it, that means that this was just a deviation. Again, that same range concept.
I'm thinking there's a chance for that.
So if it does this is where I'll be looking to get long. At that point, euro is the more favorable one, but where they're at right now is a key resistance. So if they're buying here previously, there's a good chance they could sell it off from here. And target wise would be this gray box here. Take out these stops. So I'm not a make or break point. So it could just range and let the cable and euro rally together. But regardless, cable again, look at this. Cable is above the quarterly open. So the macro is starting to turn now, and it's coming off of this block here. And if you look right, there's a bit of inefficiency filled in. So if I go do the same thing again for cable, looking at a weekly chart, range low, range high, broke out, respected there, rallied up. All this was just a retest. Everybody's calling like massive. Yes, but like it's a retest really. I go to the daily. This candle that initiated the move, it didn't retest it in 2017. It came back to retest it in 2018. So when you get little gaps, market needs like to fill them in. That's how I'm seeing it as. Now, if you break it down further, okay, there's nothing bearish about this chart to me, to be honest with you. I get the same rule if it does break this on a macro view, yes, I'm bearish. But on a weekly basis, right, if I'm looking at this really got a lot of bears in, and this sort of confirmed it. Immediately after, it wicked down all the way back up. So this, the way I'm seeing it is, I think this swing low should hold as it stands. This weekly candle, I think, was if you look the way they started, it was quite a 300 pips. So it's normal to take some profit taking, whatever you want to call it. But as it stands, this up move pushed the market lower, and then if I came into resistance there, and then it came back down, took out this low. So it's come back above, found support. What proves to me the level is going to hold. If it holds and then makes an impulse move, that tells me that the level is going to hold. Any pullback is a buy. I think short term. Now we've got the monthly open here. I'd like it to stay above the monthly open. So we've got a pivot here, and we've got the monthly open here. So any pullback, as short term at least, as long as this holds, I'm bullish. If it does break, then the macro view doesn't change, but I'm going to have to switch my short term bias. And so if it did this, then I'd say, because cable likes to fill the voids, it's one pair that really likes to fill in the gaps on voids. What I mean by that is inefficient moves. I think we're coming to here. But as long as it can stay above this gray box, any pullback is a long. So I'll probably be looking for, we open the market, and what I'm looking for is maybe a stop run. Okay, if it can, and this is where my Monday's range strategy comes in. So this is, if it can do something like this, but that's not enough. I won't buy a blind there. But if it gives me higher highs and higher lows after that, so if it did that, so that's a high. I wish I had a pen tool. It's so much easier. But if it did this,
You know, we only have time for one more. Do you have the same constructive view on silver
Yes,
that you
and
do
the
on
reason why I
gold?
prefer gold over silver, I was going to come. That's one thing I want to come to, is if we look at this chart here, the gold
Not as
silver.
strong. Gold's
I'm actually
stronger.
I'm bullish this. Now we are into resistance here, so we could range and they both could fly together. But on a monthly basis, right? I mean, this is quite bullish. So we've taken up previous month's low. The stops are going to be resting above previous month's high. So
Gold silver ratio. Yeah. Okay.
yeah, so this is looking bullish to me. So if I
Yeah.
had a choice, I'd rather take the gold over silver. It doesn't mean they can't
That's a
rally, but
pearl.
gold's going to be,
That I
yeah.
haven't looked at that in a while. Yeah, that looks like it
So,
measures pretty big, like it could go to 100 or something.
so the way, you know,
Yeah.
I remember you mentioning it, you look at Euro GBP to take cable or Euro.
Yeah.
Same thing for this, but yeah, again,
That's a great lesson.
silver's again, I am bullish this market, but just gold, just if it's like that where gold, silver's so clear, I just focus on what's clear. That's gonna make me the most.
I hear you. How about do you ever trade the yuan and have a view on it?
I can have a view on. I remember someone asking me about the Chinese one. Sure, let me find it here.
You know, it's been stalling against that 7 level.
It's the CNH. Is that the same thing? CUSD, CNH.
Yeah.
Yeah, it's Chinese yuan. Okay, let's quickly break this down. Okay, monthly.
But you don't trade it.
No.
Yeah, I don't either.
But a few people ask me. I don't know why they ask me. Because they don't trade. They just like the. It sounds exotic, so they want to look at it.
Oh.
It's funny. Human psychology is.
Hey,
but,
and
okay.
don't forget to send me your 8x10 autograph picture after the end. Okay, buddy?
I actually think we have a short-term top in place.
Yeah.
What stands out to me here, right? This is where you know everybody can draw an SR level, and you ask the same 5 people, they'll give you 8 different SR levels, even though you're just asking for 1 each. But
right,
we've got, if you look at it technically, the way I trade anyway, we had an inefficiency here, and we had a pivot, block, whatever you want to call it. What a stop run, they had 1 attempt there, okay, down. Right now we're making a higher low, but it can't see. This is the key level. Remember how we mark out the range high levels? This seems to really stand out to me. So that's not weekly. That's not looking too bad for bearishness. But if I look at it, break it down further, I think we've carved out a lower high here, and you know this is where I even will draw trend lines myself. I think we're dropping here. So risk to reward wise, I mean, it's not even. I'm actually trading this myself actually.
Okay.
I mean, at least into, well, I am bearish this market. This looks really nice down here.
Right.
And then obviously we've got targets, probably just say down there.
Do you trade? Yeah. See, look at this guy. Only pros could really analyze on the fly like that. You know, some people take them about an hour to come up with important reasons. But you know,
look at this.
You can't learn experience though, Saeed. You know, it only happens with the passing of time. How many years did it take you to get to where you're at now?
Well, I'm always learning, so I'm my 6th year, over 6 years now.
All right. Do you think it took 4 for you to really start becoming more proficient, consistent? You
know, last year I thought I was the dog's bollocks. I look back now and I think I knew nothing then what I knew now. So I'll not say the same next year. So I think it took me about at least 2-3 years to get to a level where I could read it, and then each year passes. You know, like for example, the way I use ranges now, it's only been just over a year where I use it the way I do now. So
so it was a process that evolved.
I'm sure there's been more. But yeah, for example, this scenario, short term, that's not a bad salve. There's not financial wise, but yeah, there's no reason it should go. I think this goes down from here.
Okay, buddy.
We'll see.
Well, another great one. You never let me down. Some great views, and thanks for sharing your methodology as well. And it's always great having you here. I appreciate you, Saeed, my trading warrior brother. Thank you very much.
Thank you very much, and likewise, Dale.
All right.
Have a good one.
All right, everyone. That's a wrap. See everyone for Turnaround Tuesday. If you're trading Saeed stuff, remember, don't just count your pips, count your blessings. Don't jump off a roof. Just have a winning trade because you'll have lots of doctor bills. Anyway, see everyone tomorrow. Thank you, everyone, for supporting us. You may want to check out our trial, $1 for 10 days. And if you're not happy with your broker, please reach out to Trent at Forest Park FX. Adios, my trading warrior brothers and sisters. Thanks again, Saeed.